Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Kinahan. He's a chief market strategist at TD Ameritrade with our monthly IMX reading, the Investor Movement Index. And for September, investors dialed down their equity exposure and put some into fixed income. JJ, as always, great to see you.
Always happy to be here. Thanks for having me.
All right. Looks like they reduced their exposure to FANG stock holdings, but as we discussed, they're still staying invested, just a different asset class.
Yeah, absolutely. And what's really interesting, Jill, you mentioned that they've rotated a little bit out of equities into more fixed income, but the fixed income remains really short term, with almost 70% of it being 6 months or less. So what it tells me is we've seen this pattern before, and then a couple of months later, our clients go back into equities on a downdraft. So, what it tells me is if we have any kind of downdraft, the sort of powder's dry and people are ready to redeploy it. I think the FANG stocks are interesting. Everything, except Amazon that makes up FANG was sold. And Apple, as you and I have talked about now so many months this year, continues to be the stock that people just want to sell when it rallies. And, we saw it at 200. This time we saw it 220. It remains our number one held stock, but people are more than willing to take profits in Apple. I think there's still a lot of nervousness there around where tariffs may end up.
All right. Now, the top buys were interesting because it was a very mixed bag.
Yeah, so it was all over the place.
So we had, for example, Slack, Disney, Roku, AbbVie, all from different sectors being represented.
Yeah, the Disney and Roku, I think, are a little bit related. Roku had the big sell-off, and as soon as it started selling off is when our clients came in on that one. So it's interesting, you see Netflix being a sell, Roku and Disney being a buys. I think Roku is more about, we don't care which of the companies wins, we just want the distributor. Mm-hmm. And Disney obviously making life tough on Netflix and some of the others too. Disney going to be all about Disney, as we see before. They're not necessarily sharing. It's what they're pretty good at. I don't know if people always realize when you watch the Disney Channel, they don't have any commercials except for Disney products.
All right. And again, going back to the sells, technology was obviously the sector that was most represented. But if we could look at millennial buy and sells, this is kind of the first time where I've seen it match up to other investor buy and sells. It was the same mix for the most part.
It really was the same mix overall. We continue to see a stock like Canopy Growth, which is a low priced equity, and I think that the millennial population still wants to own as a long-term investment the marijuana related stocks, and if you have a long time frame, it may make sense. Some laws may change, but to your point, I think it's very interesting that this news cycle has made everybody, no matter what your age, perhaps a bit more cautious.
This was also the first IMX in a while where I've not seen dividend names represented.
No, well, again, one of the things our IMX does is call out stocks that perhaps are a little bit trading outside their norm, so to speak. And I think we are continuing to see, the AT&Ts and some of the utility stocks of the world continuing to be very steady buys as people, one of the biggest problems we have in the market is people trying to figure out as they near retirement, how am I going to get some income with it, as you report on all the time, the fixed income picture being us being in such a low rate environment. All
right, let's wrap up with your Q4 outlook. We're in the very early innings here. I, for one, am excited to get into earnings season, talk about some fundamentals and a little bit less focus on macro, if possible.
Well, I think it's great because, the rumors, even though we have Thursday and Friday, we have the talks with China this week. Overall, when non-earnings season, you tend to see more intraday volatility, I think, as people have nothing else to talk about, so they talk about whatever rumor or innuendo may be around China talks. For Q4 overall, Jill, I got to say, I think it'll be fine, and the reason I do think it'll be okay is because given the employment reports we continue to have, people have jobs. When people have jobs, they spend money. Going into the holiday season, people really tend to spend money. It's often human nature to spend more than you should, particularly in the holidays, particularly when you have a job. I think Q4 is going to be fine. I start to get a little bit nervous when I think about the turn of the calendar and we start to have the day of reckoning on credit card bills, et cetera. Will that come back to haunt us? But for Q4 overall, I would expect the consumer to more than hold up their end of the bargain.
Well, we'll be in the thick of earnings at the same time that FOMC meets October 29th and 30th, then the Brexit deadline on the 31st. So I think there'll be some macro interspersed in there as well.
More than enough. And what that brings up to me is the financials, particularly what's going to be their outlook going forward, considering the rate environment we're in. And we see that these probabilities move so quickly. To your point about other news, you saw last week where we went from a 20% probability on Wednesday of 2 rate hikes to over a 40% probability on Friday of 2 rate hikes. So we'll have to see what the financial companies in particular have to say about that.
All right, JJ, as always, thanks for joining us at MarketSite.
Always a pleasure.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.